Hey everybody, my name is Bob Ichino. Welcome to this in-depth overview of Bitcoin futures. As I said, my name is Bob Ichino. I'm really happy that you guys are here. While we wait for a couple more people to come in, I want to point out the disclaimer down at the bottom of this page. This is not the last time you're going to see this disclaimer. Certainly shouldn't be the first time that you consider its importance. Trading in futures and options carries substantial risk of loss and is not suitable for every investor. I want to also point out why we put this at the bottom of every page. My sort of core competency is in futures, but it's also in risk management of my own trading. And I worked as a risk manager for a prop firm. I was an investment officer at a hedge fund of funds for 6 years, actually chief investment officer of emerging managers. And one of the interesting thing about looking at emerging managers, which would be managers with 3 years of track record or less, is that you had to keep an eye on the risk they took. So understand that the risk you take in futures, the futures market allows you to be treated like an adult. It allows you to use margin and leverage. And I'm going to go over margin and leverage in this particular webinar, but I'm not going to go over it in detail because we're focused on Bitcoin futures. So the really big thing you need to understand with margin and leverage is the risk you take is the risk you are taking. I always think every trader should have a mirror on their trading desk. And anytime they take too much leverage or use too high of a margin level for their own risk tolerance, you look in the mirror and that's the person who made the mistake. So try not to use futures as a thing that allows you to take excessive risk in exchange for excessive return. Risk and return are inseparable. You can't separate the two. So if you take too much risk, yes, you may have an outsized return, but you're taking too much risk. So let's go ahead and give it a second for people to kind of filter in, and I'll get started with the meat of this. All right, I think that's good enough. Let's get started. We've got a good crowd in here. I will look at the chat at the end of this presentation. I'm not looking at it right now. If you guys are all just saying good evening to me and thanks, I appreciate that. If you're screaming and cussing at me already, that's okay too. I don't mind that so much. I originally come from the trading floor. So let's go ahead and look at this in-depth overview of Bitcoin futures. Realize again, the disclaimer is at the bottom. So what am I going to cover? I'm going to quickly cover what is Bitcoin, then talk about Bitcoin futures, the full-size contract. I'm going to talk about the micro Bitcoin futures, which is really what I'm going to focus on because that's what most retail people will trade. It is what I trade, for the record, even though I was a member of a hedge fund for a long time, traded on the trading floor at the CME. I've done every job in this business. I still trade micro Bitcoin when I trade Bitcoin futures. I'm going to talk about margin and leverage. And within that margin and leverage component of this particular presentation, I'm going to talk about a lot of things under that heading, like who might use these, why might they use these contracts, etc. And then I'm going to go ahead and look at an example on the Plus500 platform, a trade example of what someone might do with Bitcoin futures. So moving forward, what is Bitcoin? Well, we know what Bitcoin is from a technical standpoint, right? I mean, you're talking about a blockchain product, and Bitcoin futures are a derivative of that blockchain product. Now, some people look at Bitcoin as a currency, and it is true that you can spend actual cash Bitcoin at certain establishments that take Bitcoin for payment. You could get a service in exchange for those. Of course, a lot of the exchanges take Bitcoin. I'm talking about the Bitcoin exchanges, the crypto exchanges take Bitcoin as a currency to buy other cryptocurrencies. It can be looked at as a safety asset. Okay, now you've heard people probably lately refer to Bitcoin as digital gold. That's the safety component of Bitcoin. I'm going to briefly sort of move away here from one of the reasons why I want you to be careful about using Bitcoin as a safety asset. I did a Bloomberg interview one day, and one of the other people on the panel with me called Bitcoin a high beta store of value. Okay, so in other words, if you're storing value in Bitcoin, you have to worry about the high beta of it. And what does that mean? Well, it means the volatility. It probably isn't a safety asset as long as it keeps its downside positive correlation to the NASDAQ, which it is still very strong in. What does that mean? Oftentimes, not all the time, but oftentimes, when the NASDAQ drops, so does Bitcoin. And my theory behind that is that people who are very heavily invested in tech are also heavily invested in Bitcoin. So when tech goes down, Bitcoin goes down as well. I don't know that that's a fact. That's just sort of my thesis behind it. I'm doing research on that now to write a Substack, and we'll see how that comes out. I don't know if it's going to come out well or not. But according to the SEC, Bitcoin is a security. It's not a currency. It is a security. It is an asset. Subsequently, in the US, you have to pay taxes on gains on these securities. So right now, from a regulatory standpoint in the US, Bitcoin is treated as a security. Bitcoin futures were established a while back by the CME Group, and I'm going to give the CME Group some credit here. I think the CME Group was integral in causing Bitcoin to be viewed by larger institutions as a worthy asset, as something they could invest in and something they could trade. The creation of Bitcoin futures gave some of these larger institutions a place to hedge risk and sometimes a place to get involved without having to go to exchanges to make transactions with other institutions they may or may not have trusted. So I'm going to give the CME a lot of credit for originally creating this BTC contract. Now, the trading hours are Sunday through Friday for the original BTC from 6 p.m. to 5 p.m. Eastern with a 1-hour break each day. The contract unit for the original Bitcoin is 5 Bitcoin, okay? So it's a very large contract. The minimum price fluctuation, is $5 per Bitcoin, and that value is $25 per contract. Excuse me, everybody. It is cash settled to the CME-CF, that's the Bitcoin reference rate. We should talk about that for a brief second. What is the Bitcoin reference rate? Well, essentially what the CME did was they created an index, and that index is derived from several exchanges. It takes the trade data from multiple different crypto exchanges to come to an index price, and that's what Bitcoin, or what the Bitcoin future is settled to. Now that reference rate actually prices out very well to some of the larger Bitcoin exchanges. So it's a very reliable index in terms of where it goes or where it settles in at. The position limits for this particular contract is 4,000 contracts, which likely won't matter for people in this particular webinar because you're talking about 4,000 times 5 Bitcoin. So you're talking about 20,000 Bitcoin. So that's not necessarily going to be anyone in this particular webinar. If it is, bless you. I'm very proud of you for getting to where you're at. The micro Bitcoin futures is really what I want to focus on for this particular presentation. The contract unit is 1/10 of a Bitcoin. Same trading hours as the original Bitcoin. And if you jump down to the settlement, it's the same settlement, settled to the CME-CF Bitcoin reference rate, which again is very reliable. Now, the minimum price fluctuation is 50 cents per BTC. So it's 5 cents per contract in that minimum price fluctuation. Okay, so I'm going to show you a little example of that in a minute. The position limits on this is 20,000 contracts. That's why somebody like me, who is probably a little bit larger of a trader than most people watching this, but maybe not the largest, certainly not the largest Bitcoin trader, active trader in the world, that's for sure. I can trade the micro Bitcoin and cover pretty much everything that I need to cover in terms of whether I'm hedging something or whether I'm trading Bitcoin against some other asset. The micro Bitcoin suits me very well in terms of the percentage of my own capital that I trade in Bitcoin. This is a very good contract. Again, I want to commend the CME on this as well. There's another contract that's pretty new and has gained a lot of popularity. It's called Bitcoin Friday Futures. The contract unit is 0.02 Bitcoin. Trading hours are the same. Price fluctuation, $5 per Bitcoin, and the minimum per contract is 10 cents. Now, this particular one is, again, settled to the cash CME Bitcoin reference rate, and it's got the same position limits. But this is a Bitcoin reference rate of New York. What is the difference between this and the micro Bitcoin? Again, I trade the micro Bitcoin. There's two of these contracts trading at any given time, and one of them always closes on the Friday that you're looking at, the forward-looking Friday or the Friday of that week. Bitcoin Friday futures were designed for the Bitcoin reference rate of New York to be closer to where the actual Bitcoin is trading. Now, if you're someone that's putting on longer term hedges or taking positions that you think you're going to hold for longer than a week or 2 weeks, this contract probably is not for you. But this contract has generated a lot of volume because a lot of retail traders are active, very active. They're in and out and generally don't hold things for longer than a week or 2. My average hold time for my futures trading is 26 days. So for me, I don't need a contract like this. I actually prefer to be in sort of a longer dated contract. But for those of you that are in 1 day, 2 days, 3 days, this might be the contract that you want to look at going forward. These, again, are very manageable price contracts in terms of the price moves. And if you trade 1 or 2 contracts, you get a good feel for the risk of these things. And I want to point out with Plus500, the demo account is free and unlimited, as well as its live prices. That to me is one of the best things about Plus500 as a company, the live, unlimited, free demo that you get to use on all of the futures platform, on all of the futures contracts within the platform. So let's take a look at the tick size and value side by side. The Bitcoin is 5 Bitcoin, $5 per BTC, $25 per contract as the minimum value per tick. The micro, 0.1 Bitcoin, $5 BTC is the minimum, and then per contract, it's 50 cents per tick value. And then the Bitcoin Friday futures, 0.02, again, $5 and 10 cents per minimum move per contract. This is pretty self-explanatory. You can go ahead and take a screenshot of this if you want to, but it's also readily available on the Plus500 platform. You can go ahead and look at each one of those. And again, one of the things I like about the Plus500 platform is the margin that you're spending is very evident on your trade ticket, down at the bottom of your trade ticket. So again, very, very valuable thing to look at. When you take a trade, you can go ahead and see what margin you've used in terms of initial margin. So why would somebody trade futures instead of just going into an exchange and buying actual Bitcoin? So first of all, if you're somebody that has a wallet, okay, that uses an actual Bitcoin wallet, this is even more of a question for you. But if you're somebody that holds your Bitcoin at an exchange, I would suggest that you trade more futures than you do cash. Okay, that's just a personal suggestion from me, not from Plus500 or anyone else, because the exchanges have risks. You can just look back as closely as Terra or FTX, and you can see some of the risks that you get with these off regulatory exchanges. Okay, they are theoretically regulated, but they're not as closely regulated and they don't have as many regulatory bodies as the CME does. The CME has a double-digit year history of no blowups, virtually no blowups. So if you're gonna trade a lot of Bitcoin just to sort of get into the area of Bitcoin and of crypto, you'll see when we go to the platform, there's also Ether in there. If you're going to just start with crypto trading, my suggestion is to do it in the micro crypto futures at the CME on the Plus500 platform. So regulation, CME futures on the Plus500 platform is regulated, highly regulated. That means there's virtually no counterparty risk. The CME had a slogan. I was at the CME for 25 years, and one of the slogans there was good to the last drop. In other words, if your counterparty failed, your broker was there. If your broker failed, the CME was there. So you don't have to worry about counterparty risk or any of the kind of things that people who try to frighten you out of trading crypto might bring up. Leverage, you can control significant positions with smaller capital. Again, I have to point to the disclaimer that was there at the beginning of this particular presentation. Be very careful about the way you use leverage. But if you have X amount of capital that you want to put into crypto, and you're going to put that all into crypto, you don't have to put all of that into your Plus500 account to manage the size crypto that meets the requirements of the capital you plan to put into crypto. Okay, you can keep the rest of it over here on the side until you get a margin call or need to build a larger position. Hedging. You can mitigate price volatility risks effectively. If you have a large cash crypto position, in my view, there's nothing better than CME Bitcoin futures or Ether futures at Plus500 to hedge it. Okay, so if there's an event coming up, a halving, a Fed meeting, okay, some sort of announcement with the new administration dealing with crypto, and you want to hedge the large position you have in actual crypto, in actual cash crypto, you can do the CME contracts, the micro contracts, and get yourself protected, and then close those out and keep the upside of your cash crypto if that's what you wanted to do. Short selling, easy profits from price declines. You just short it, you just sell it. The CME doesn't need you to borrow it or anything like that. You just sell it and it's ready for you. Price efficiency, you get transparent pricing with that Bitcoin reference rate. You don't have to worry as to whether you got the best price or whether your broker's taking something in between that. It's the CME. Okay, the price is there. The price you see in the bid and ask, that's the price. There's no middleman in between it. Potential tax advantages. I almost didn't want to put this in there because I'm not a tax accountant and the US tax code is changing, seems like every 30 seconds. But futures are treated differently than capital gains taxes on crypto and other assets. So ever since the SEC made crypto a security, they became susceptible to capital gains taxes. Futures are treated differently, but talk to your tax professional about whether that's an advantage for you or not. No custody issues, no need for wallets or handling private keys. I mentioned that a second ago. If you don't use a key and you've got all of your crypto or you plan to hold all your crypto at one of the multiple crypto exchanges, you need to be very careful with that. I don't mean to disparage any of the exchanges. Some of them are very reputable. Some of them have kind of proven out over the last, Bitcoin's been around 16 years, so I don't want to say over the last 16 years. Let's say over the last half decade, they've proven their value, but no one has proven their longevity value better than the CME group. And on top of that, Plus500 has an incredible reputation in the business for custodial issues. So you don't have to worry about it there either. And then liquidity, deep markets with institutional participants. 51% of Bitcoin is held by retail traders. The other 49% is held by institutions and ETFs. They hedge in futures. Okay, they may hedge some of it somewhere else. But if you think about it, if you're involved in an ETF that buys actual Bitcoin, and that's their product, they just buy Bitcoin and that's their ETF, where do you think they hedge? They can't hedge in Bitcoin because that means they're selling and they got to offset. They're hedging in futures. So it's very important to keep an eye on that and see how that is the way that you can do it as well and see these deep liquid markets. And you'll see it as you start to look at it on your Plus500 demo, which again is live prices. Can't get that anywhere else. Micro Bitcoin futures. Here's a fictional example trade. Assume you go long and you buy one micro futures contract at an entry price of 90,000 per Bitcoin, and later you end up selling the contract at 90,500 per micro Bitcoin. The math works like this. This is how simple it is. 90,500 minus the 90,000 you bought it at, so your take profit price minus your entry price. Minimum tick size, $5 per Bitcoin. So that's 500 divided by the $5, that's 100 ticks. $50 per tick. Profit is $50 there, right? The trade results in a profit of $50. Okay, does that make sense? I think it should make sense to everybody. Let's talk about margin and leverage. Micro Bitcoin, your day margin is $125, and your Bitcoin Friday futures day margin, $30. So you could put on a Bitcoin Friday futures trade for $30. All right, now there may be some movement that causes additional margin calls on you, but what's it going to be? I mean, your initial margin was $30, and then you've got maintenance margin that may come in if it goes against you. Most of you are high frequency traders, so you're looking at these things moving quickly, right? So that's what you want to look at here. That's your initial margin leverage for micro Bitcoin and Bitcoin Friday futures. Again, I skipped the large Bitcoin because I don't think anyone here would actually be doing it. All right, possible market movers for Bitcoin. Changes in crypto laws, bans, or adoption in major economies. Think about that last one, adoption in major economies. There's a lot of people out there talking about a rally in Bitcoin or crypto in general that started with the new administration winning election in the US. That would be something that happened in a major economy. Adoption by somebody big in the space. Imagine if Fidelity said they were going to start a Bitcoin mutual fund. That would be an example. I don't have any inside knowledge of that. Need to throw that out there. I'm not saying that might happen. Macroeconomic events, interest rate changes, inflation data, or a financial crisis. That's where I talk about this correlation between the NASDAQ and Bitcoin that still exists. I'm excited for a time when it doesn't exist, but just so you know, Bitcoin doesn't necessarily have an upside correlation. In other words, NASDAQ could be up and Bitcoin would be either down or up, and the NASDAQ's down, Bitcoin has tended to follow it. So that kind of needs to go away in order for people to understand that it is theoretically a safety asset. Technological updates, network upgrades, scalability solutions, or security issues. Also, issues that allow Bitcoin, platforms allow Bitcoin to be spent more easily. Lightning Network was one of those that promised that. Didn't quite deliver, but you're going to want to be looking at those things as well. Market sentiment, fear and greed driven by media, social media trends, or high-profile endorsements. Supply events, Bitcoin halving cycles, reducing mining rewards. We've seen many of those. Those are when the miners get their allocation cut in half for the mining solutions that they. So what miners do is the way that they mine is they go ahead and solve these complex mathematical problems that allow the Bitcoin transaction to be registered in chain. So and then they get paid for that. The halvings refer to when they get paid half of what they used to get paid, and that disincentivizes the miners to continue doing what they're doing. Movements in other cryptocurrencies or stablecoin dynamics. Also that NASDAQ correlation that I talked about. If NASDAQ were to collapse, you may see Bitcoin collapse along with it. I'm expecting a time where those correlations are going to break down, but so far it hasn't. Geopolitical events, currency instability, or sanctions driving interest in decentralized assets. We saw that in some emerging markets. There are predictions for countries in 2025, more of these emerging markets, to adopt at least a small portion of Bitcoin reserve. That's probably in the market already because it's been talked about a lot. And then looking at possible users of the contract, okay? Hedge funds and asset managers seeking exposure to Bitcoin in a regulated environment. I can tell you that that is happening today. I can't tell you who's doing it. I can't tell you to what extent they're doing it, but I have contacts in the institutional world from my past lives, and there are institutional investors that are using the futures to have exposure to Bitcoin. Crypto miners, we sort of talked about that already, but they do sometimes use futures to hedge against Bitcoin price volatility and secure predictable revenue. There's a math equation that relates to that. That isn't really important for what we're doing here. And then speculators, traders aiming to profit short-term from short-term Bitcoin price movements using leverage. I am one of those. Okay. When I trade in Bitcoin, I'm often speculating. I do have core Bitcoin holdings. Some are in futures, some are in actual cash. My hedging is exclusively done in futures. So, but I am a speculator in futures, probably on a monthly basis. It's moving more toward a weekly basis. So those are some of the peoples that might use it. Here's more: portfolio managers diversifying portfolios or managing risk with the Bitcoin futures contract. Corporations, there are several companies that have Bitcoin holdings. Tesla is one of them. I cannot tell you honestly if Tesla is involved in Bitcoin futures, but I can tell you that some companies do hedge their Bitcoin holdings with futures. I can't tell you if it's Tesla. Can't tell you who it is. Arbitrageurs, not sure if I'm saying that correctly. I think I might not be. Exploiting price differences between Bitcoin spot on their particular exchange and Bitcoin futures, because the Bitcoin reference rate amalgamates all of these. So if one of the exchanges gets sort of off kilter, these arbitrageurs may actually go between the two prices, buy futures, sell Bitcoin Cash, or vice versa, and then close out both positions and try and make the difference between that. And then market makers, doesn't apply to any of us, but providing liquidity in Bitcoin futures to earn profits from the bid-ask spread, that does exist. That is where most of the markets come from, is from market makers. I come from the trading floor. We used to call them the locals. The locals made markets. I still call them locals, but the correct term is market makers. So let's look at a case study on the Plus500 platform. Now, I have to caution you, this is something that's happening right now. I'm begging you not to do this trade in a live account, okay? Because this is a trade example, and I fear that people may actually look at this trade. I actually almost didn't want to do this trade or show this particular trade example, but I'm going to, and I'm going to trust that you guys will be responsible and not take this, because it is certainly not a trade or an example that Plus500 is recommending. It's something that I see happening, and I'm going to walk through the entire thing for you. All right. But I'm going to leave out the profit target, the ultimate target, and I'm going to leave out the stop. And this is my way of asking you guys not to do this in a live account, okay? Maybe keep an eye on it or something like that. So let's go to the Plus500 platform. You should be seeing it right now. All right, so here I've got the crypto screen up with the micros, and I've got a micro Bitcoin chart below. I really am nervous about showing you guys this, but I'm going to show you anyway. Okay, so what we have here is CME Micro Bitcoin Futures. You could see over the short term, since about the 16th, it's been in a mini downtrend within a larger uptrend, okay? And what we have developing here, okay, is a technically correct double bottom pattern. Now, I'm going to go in some of the characteristics of a technically correct double bottom. And I need to get through this quickly because I'm running out of time and I want to see if any of you guys had questions. This is one bottom. This is the peak of the double bottom. And this is the second bottom, typical W pattern. As you can see, I'm moving my mouse here on the W pattern. What we have here with these two white lines is the areas that I look at that the second low has to fall within in order to make this a high probability double bottom, okay? And that is basically discovered by using your retracement tool. So you can see I did a retracement level here, okay? I went from this high to this low, and then in between the 127 and the 38.6 here are where these two white lines are. Now I'm going to delete this. Now I'm going to leave that up for a second. As long as the right-hand bottom falls within these two white lines, which again, the 127 and the 78, it's actually with the way that I drew this is the 78, but essentially 25% above and 25% below. As long as the right-hand lobe falls within that range, you have a technically correct double bottom. The second thing you want to look for is the measured move target going to extend into the move that the pattern is reversing, okay? This is the move that the pattern is reversing right here, this fall from December 16th down to this bottom here. And I can see that the first target, which is the 78.6 extension, does fall. The second one is a measured move target. Okay, what is the measured move target? Now I'll get rid of this Fibonacci here. By the way, if you wanted to use the Fibonacci's, you actually come right in here, you drop down the drawing tool right there, and you go to the Fibonacci retracement here, excuse me, and you go from this high to this low. That's how you do it. I got to make sure I get on the low there. Let me get rid of this. And that's where you get the extension and those 25 basis point on each side things. All right. And then in order to get the target, you reverse it. Well, I do this all the time. I'm so used to right clicking on things that I forget I have to double click it. Bear with me a second here, guys. Let me get back to the arrow. Delete. So you right click, delete the drawing that I should not have drawn, and delete this one. And then in order to get the targets, pull up your tool again and just do it the opposite way. Go from this high down to that low. Sorry, my bad. From the low to the high to get the target. Okay, and there's my first target, and then there's my second. So getting back to what I'm talking about here, once we got a close above this high right here, which is 101,485. Once we got a close above that, which happened here, it's a long trade for me in theory. Okay. And then the target is 100% of the move from here to here added to the top. So what does that mean? The high here is 101,485, as you can see on my screen. The low here is 99,330. So when you subtract 99,330 from 101,485, you get 8,155, and then you add that to this high, which is 101,485, and you get 109,640. You can see I have this white line right here that I've just highlighted in red. It's at about 109,637. I always like to get out a few pennies before, just to make it not the exact target. So that is the example I have going right now. Now I can do this with micro Bitcoin, and I can do as many of these as my risk manages. All right, you have to look at it from a risk management standpoint. So this is something that's going on now. And again, I really am pleading with you guys not to do this in a live account. Look at this in a demo account and see how this trade pans out, and see what the entry, or just open a demo account at Plus500 if you haven't already, and see what this particular trade works out in a demo. You can do it with 1 micro, a couple micro. Go ahead and do this in demo and see how it works out. And you'll be able to see the tick size, the value, all these other things, and how they play out with an actual trade, because I've shown you an actual trade that I would take. Now, I haven't shown you the first target clearly. I have shown you the second. I said I wouldn't. And I haven't shown you the stop, but I will tell you the stop would be below here, be below this 95,178 level. And I mean below it, not at it, but below it. And there's a specific reason why I would do that. All right, guys, I'm well over on time. Any questions that I missed? Just going to go through these real quick. Ashton, please let me know that you saw my answer about why plus 500. Again, I only work with reputable companies. I can't stress that enough. There's a lot of crap out there. And just the fact that plus 500 demands that I emphasize the disclaimer about the risk to sort of protect people who are going to use too much leverage. I don't want you guys to get in trouble. I want you guys to succeed. You guys can succeed. Everybody in this webinar has the ability to succeed on some level. It's just finding that level. And if you take too much risk in the beginning, you're going to lose your money while you're looking for that level. Okay. Thank you guys. I'm going to let you guys go now. All right, guys. Cheers, everybody. I'm going to go. I will be doing a lot of these with plus 500. At least I anticipate it. Unless, of course, you guys email them and say that presentation sucked, which you're welcome to do. But cheers, everybody. I hope you guys have a great week.